Here we go. It's the Real Money Show on AM 640. My name is Jeremy Wiseman. I'm joined by Jerry Correia. The number 18778-SILVER. The website guildhallwealth.com. Before we jump into everything, Jerry, oftentimes in our office, you and I, we're a little bit like ships in the night. Haven't had too much time to chat with you. So how was your week anyway?
Week was busy. Great meeting some new people, and I was invited to speak at a group this week, a group of great individuals who are very concerned about the way Canada has progressed, or I should say, has digressed. So it was great to meet the group, and huge interest in precious metals. Wanted to find out how to get started and how to get gold within their RIFs and liras and things like that. So I got a chance to provide the solution that they were looking for. So I'm really happy to be able to do that.
Yeah, definitely a lot of calls this week with regard to RSPs. How does it work? And in one of the later segments, we're going to talk about how to win the RSP game. It's something that I've noticed in talking to people, because everyone's got advisors, but they don't come to Guildhall with this sense of knowledge about what is the game, how do you win it, what's the goal? So without having the guideposts, how do you know if you're actually winning the game? So stay tuned for that. So you'll learn what you need to do to win the game at RSPs, TFSAs, well, actually RSPs, liras and lifts and all of those type of things. We're also going to do some talking today on central banks. It is a topic that we have to follow. Why? Follow the smart money. Central banks are buying gold. We're going to talk about the whys of central bank buying of gold, and hence follow the smart money. Speaking of central banks, we got to take a look at the Bank of Canada. They just raised interest rates, and it's more about watching what the actual move is and the narrative they're putting out alongside of it, which there's some absolutely crazy information that went along with their statement. If you haven't heard it, you want to stick with us to find out about that. And but I had a conversation this week, Jerry, with a client, and it sparked a conversation about minimum wage and how many hours does a minimum wage earner in Canada have to work to earn themselves 1 ounce of gold. That's going to open up a topic for us, so stay tuned to that. Last week, Jerry, we talked about the fact that CNBC came out, mainstream network, talking about silver going to a 9-year high at some point this year, and there was really no but in the article. Most of the time when you read these articles, there's some sort of but. Mm-hmm. There's some sort of but, be careful. There's always some sort of warning or morality tale that goes along with precious metals. Speaking of that, I'll tell you a quick funny story, Jerry. There's a book right here. You can see it, called The Power of Gold, The History of an Obsession. Thought, hey, that's a good title. I got to pick that up, right? Mm-hmm. That's some good clickbait. So I start reading it. I'm 3 chapters in, and I'm realizing the whole thing is a morality tale. It's all, this person bought gold and died with it. This person couldn't sell their gold or whatever. And it's just tales throughout history of just, people who are suckers for being gold bugs. I go, who wrote this? I go to the front.
Obsession.
I go to the front. And it's some representative or someone who works at the Federal Reserve. Right. I go, yeah, okay, now I get it. Because if you had a printing press in your backyard, and what would you do with it?
Get to work.
You'd get to work buying some physical assets, which again, follow the smart money. That's what central banks are doing. But getting back to this article on CNBC, what did you make of this? That they had no doubts about it. That it's almost their essentially, quietly, this may be the beginning of more, asserting, hey, you might want to get into this market.
Mm-hmm. Well, the silver squeeze proved one thing, that there is a finite amount of silver available for all of the promises of silver deliveries in the future. people who got involved in the market were able to see that almost right away. The market got tremendously excited, and it revealed to the LBMA, revealed to us that the LBMA was in fact panicking, that had this demand continued, they would have run out of silver for delivery. So the demand, and that's what CNBC talked about, the supply and demand. They dropped the fundamental, citing supply shortages and obviously talking about the demand coming from stats from the Silver Institute, showing that photovoltaic and solar supply is necessary to continue to drive that industry. So they just dropped fundamentals that we talk about all the time here at Guildhall. Is when you have lack of supply, huge demand for a finite good like silver, prices are going to go one way, and that's up. So it was not coupled with any negatives or any fine print, but it was a very sharp revelation that you better be in this market. We want to be on the record of saying it as well to give CNBC some sort of credibility, but they were right on.
So your contention is that CNBC had a come to Jesus moment, that they're saying, they're looking at the fundamentals and saying we can't deny it anymore. Vince Lancy on a weekly update on Arcadia Economics, he's pretty good. He's got some really good credentials in the background on futures contracts, etc. He does a great job of analyzing all of the different forces that could be at play in the market. And he does some charts and things like that. So he was looking at it from an interesting perspective. He was looking at it from that in China, because it's a top-down economy, they essentially own gold through their people. Mm-hmm. So they can go out and say, hey, everybody should own a little bit of gold, and then bang, you've kind of covered everything. And he looked at this article and said, since there doesn't seem to be any strings attached to it, that he starts to wonder if it's the beginning of North America starting to tell its citizens it's time to prepare, kind of without telling people it's time to prepare. So get the recognition out there, get it onto people's minds, start to kind of get it into normalize the ether that this is a market to be a part of. I notice in precious metals, when we're talking to people, we know, and anyone who's listened to the show knows, that it's important to have a diversified portfolio in that you have negatively correlated assets. Gold and silver are negatively correlated to the fiat currency. Mm-hmm. And so you're never truly diversified without a hard asset. Now, that said, many people come to us with zero. So they're going from zero to maybe well over the 15% because they're looking at the everything bubble bursting and they say, I need high ground. I need my safety. I need my raft. I need my bridge.
Yep.
And gold and silver are providing that. And then we kind of move into it with an understanding that one day you'll probably sell 2/3, three quarters, and get it back down to that 15% in the precious metals.
Mm-hmm. You know, I think that's the psychology, especially for those people who don't have any precious metals for the first time, or they're looking at this market for the first time. They're seeing the bubbles bursting. They're seeing the inflation. All of the things that once made sense are just, just breaking in front of their eyes, and seeing the portfolio losing, 20, 30% some over the course of the last 2 years. People rush into this market, defying the 15% threshold, as you mentioned, and, rightfully so. I think, I echo the sentiments of Egon von Greyers from Matterhorn Asset Management in Switzerland, operating and managing portfolios of high net worth clients who are holders of gold, physical, outside of the banking system, and they do this primarily to protect themselves. And then they're not selling. The idea would be to sell when things get back to somewhat normalcy, because there is nowhere else to park your wealth. You've worked so hard, you've amassed this wealth, you've amassed this generational wealth that was passed on to you from your your loved ones, your family members. They worked very hard for that. They fought to get your wealth to, generate some income and generate prosperity. We're supposed to steward that. We have to steward that wisely, and in the face of many, many bubbles. You have bubbles bursting before our eyes. My eyes are on the Bank of Japan. That thing is sizzling hot, and that will trickle into every single institution, every asset class, and you want to be outside of that destruction when it happens. So rightfully so, people are going hand over fist. The demand is through the roof. And this is ultimately about protecting your wealth while positioning yourself for what CNBC calls a great year in silver, great year in gold. We're going to see that play out within the next year, 3 years, 5 years, 10 years.
And, when you're diversifying into a hard asset like precious metals, which is real money, by the way, I think of Exter's pyramid and you say people are going to grab for different versions of what they think is safety and what they think is money. And they're going to realize they've gone from raft to raft that has holes in it. They need the real solid stuff. And only physical gold and silver can provide that zero counterparty risk, which is so important, that sovereignty that you need. And so that's something to consider. And you just mentioned Japan. Nobody's watching Japan that closely. When it starts to unravel, it's going to come from places that you didn't know existed. Not that people don't know Japan exists, but I'm saying you're not going to know where it came from. It could be something completely innocuous. So it's good to be prepared. It's good to think about getting to that 15%. How do you do it? You give us a call, 1-877-8-SILVER. The website, guildhallwealth.com. It's The Real Money Show on AM 640. Stick with us. We'll be right back. Welcome back to The Real Money Show. The number, 1-877-8-SILVER. The website, guildhallwealth.com. We're talking about ways to protect, survive, and thrive during these uncertain economic times, and certainly feels like we're hurtling towards a brink. Some may say a precipice, if you will, Jerry. And on that note, we've often talked about having your popcorn ready. Tell us about the new product that's coming.
I'm glad you brought that up, Jeremy. So we have the 1 ounce Burton Morris Pop. MTB is just releasing the 1 ounce silver coin. It's actually shaped like a box of popcorn. Enjoy this while we witness everything play out. What we're seeing, everything is just firing away at us regarding central banks and the panicking at the central banks. So we got to grab our popcorn and watch this thing play out, because if you have precious metals, you're protected and you're watching the show and you're enjoying it. So enjoy the show with this popcorn. You got to get this, guys. This is the 1 ounce silver coin. It looks like a box of popcorn, and it's 2,500 mintage. So there's only about 2,500 of these in circulation. It's been released. It's Swiss, and it is by the artist, pop culture artist Burton Morris. So you want to get this, and it's it looks like an Andy Warhol painting, and his works are just bold, and they animate everyday objects to create statements of pop culture. And what a perfect statement for our pop culture here in getting a Orville Redenbacher popcorn popping in our office.
Yeah, it's like the great financial awakening, or the great financial unraveling, depending on which side you're on. And when are we expecting those? Do you know?
Should be coming in a couple weeks.
Yeah, we'll have them in a few weeks. So just kind of wanted to give you a sense of a preview of that. Okay, Jerry, we talked, we mentioned in the last segment, I was having a conversation with a client, and he said, Jeremy, I got to tell you this. I was thinking about this. He said, so this client, I guess he was a teenager, he had a part-time job making pizza at a fair, something like that. And he was getting paid $3.50 an hour, minimum wage. And he said at the time, gold cost $40 an ounce. So that was 11 hours worth of his effort, of his value. So we said, okay, let's look at today's minimum wage. It's $15, right? I don't know, $15.50. At today's price, it would take 186 hours.
Not 11 hours, like this person?
From 11 hours to 186 hours of work, of your hard labor, which once upon a time only took you 11. So that's, if you're a part-time worker, that's a third of your time, or 1 week's wage maybe. Now you're looking at weeks, like over a month, to be able to buy 1 ounce of gold. what does that say to you about the value of the Canadian dollar?
Time. It just reflects losing time. And when you have time as a result of the loss and diminishing or having our currencies being decimated, we're losing time here. Time is of the essence, and you are valuable. Our work is valuable, and you want to work wisely, and you also want to invest wisely. You want to park your money where it's going to appreciate and not depreciate in value in the face of this stealth. Who would have known we need to now work 2 jobs and take another 3rd job and drive Uber at nights, and all of this, we're getting stretched thin because they have stretched our loonies extra thin. We're almost transparent with the loonie. If you see what the central banks are talking about, the attack on our currency has gone along too far. And, it's very sad that it takes, how many hours? 120, what did you say? 108?
186
hours.
Hours.
That is ridiculous.
So, yeah, I agree with you. I didn't think of it in terms of what you just said, in terms of the time it's robbing you of. But it's true. It's robbing you of your labor. It also says how well gold has done to protect that labor. To me, it demonstrates the stealth nature of inflation. That it just over the years, slowly taking away 5, 6, 7% a year, and all of a sudden,
you're behind.
All of a sudden, the country feels destitute, right? And then you wonder why the crime's up. Okay, they let people out of jails, but why they're not being tough? But why is crime up? Why are people using food banks? Why is all this happening? Is it just because energy prices magically went up? No, there's specific reasons for it, and you've devalued the currency. Who got rich is the question, because the majority of people have not, based on that currency. And hey, listen, Pierre Poilievre, credit to him. He's doing a great job of educating people on that. But again, this comes down to the quality of life that's being provided because of the currency. And then, ironically, the people who are on minimum wages, tend to have this urge to ask the government for help when it was them who caused this issue. Mm-hmm. I always find that interesting. It's like, we need more housing. Well, the government caused the housing bubble. They didn't have to drop rates for 11 years and push the market up. Mm-hmm. The banks didn't have to participate in predator lending. People go to the bank and say, the bank will lend me $800,000. I guess it's okay. Mm-hmm. It doesn't mean it's okay.
No, not at all.
But people just, hey, if the bank says it's okay, they've done the homework. They're the conservative ones. We don't live in that Canada anymore. We don't live in the Canada of $3.50 an hour. What's the point? My point is that we have to do something to protect ourselves against this. And clearly, the performance of physical gold over the last couple decades has shown it's going to do the job. I think this dovetails nicely into the game of RSPs. But any last thoughts on this?
Well, my thought would be just to get started. I mean, if you have been waiting for, something to happen, we're seeing it happen. We're losing time because of this inflation. It's very stealth right now. It's not stealth. We're seeing prices going up through the roof, and this is just going to continue. So I just want to encourage people, if you have been following the news, following the markets, and you're listening to the show and you have not gotten started yet, get in touch, get the investor kit, and find out what works for you and how we can tailor a solution for you, and protect your wealth, protect your purchasing power now. It doesn't matter if you have hundreds of thousands of dollars or tens of thousands or a few thousand. It doesn't matter. You want to get into something that has tremendous value, has topside potential, and will protect your wealth. So I encourage you to get in touch.
The number, 1-8778-SILVER, the website, guildhallwealth.com. We're definitely happy to have conversations with you about how to get started. Let's talk about the game of registered accounts. You ever do your taxes, Jerry, and you get a call from the accountant or an email that says you owe taxes?
Oh yeah, the dreaded
you owe taxes. Yeah. And hey, if it's a few $100s, you kind of go, okay, fine, great. Anyone that's been slapped with a large one, where you owe anything north of a few $1,000s, the feeling at least when I had that experience, was why? Why did I give that away? I could have put that exact amount of money into my registered account, and it's at least mine.
And I worked so hard to get that.
Yeah. What are they going to do with it? Right? So that's the first thing. Understanding that we're going to defer the taxes in the registered account, and it's not going to the government. We're keeping it with ourselves. Now, here's the game. First, avoid the tax as much as you can, if you can afford it, etc. Right? Like if you're in a lower tax bracket, maybe it's not necessarily something that needs to work for you. Maybe you could do a TFSA. Talk to your advisor. What I want to talk about is how you win this game. And the game is, once you've put your money into a registered account, the clock is ticking. We've talked about time just a few moments ago. The clock is ticking. Over the next 15, 20, 30 years that you're going to have your funds in this registered account, you need to beat inflation. That is the number one priority of the game. Now, if the government says inflation's at 2%, sorry, that's not the truth. It was running at 7. They were saying it was 2. That's a negative real world return of 5. Mm-hmm. Just as an example, gold is up 370% over the last 20 years, okay? I want to just kind of put that there and leave it for a moment. You need to beat inflation. Yes, the last year was very high, 15%, I would say. Mm-hmm. This year's going to be equally high. At some point, it's going to start coming down, probably because we need energy prices, right? They need to find energy somewhere, open the Keys pipeline, right? These type of things. But beat inflation. So if we say inflation's running at 100% every 10 years, that means every 10 years you need to double your money. Mm-hmm. Now, if you can double your money, that means today I've got 100,000 in my registered account, and in 10 years, I want to be able to buy the same amount of goods. And if that means I need $200,000 in the account, so be it.
Right.
Great. If we can make that the first accomplishment, you're already won the game. Finally, when we remove the funds, when it converts to a RIF, and you now are being taxed on the income, add 30%. So over a decade, you need to be making 130% gain over and we're estimating inflation 100% a decade here. Over a 20-year period, you need 230%. Over 30 years, you need 330. Call it 350. Gold and silver, by the way, have completely done that. Now, if you can do that, happily pay your taxes.
That's right.
Not only did I retain all of the money I earned, all of it, and beat it. Now I've got profit. Profit gives you options. Mm-hmm. Maybe I decide to take some out early, and I don't care. I'll pay the withholding tax. I made the money. Mm-hmm. Beat inflation. Get over the hump of the income tax. You kept the money. I think of this, building a snowman. If I keep taking away that little snowball and handing pieces off to it, I'm never going to get to a big snow pile.
Right.
I'm never going to get to a big boulder because I'm giving it away for no reason. You got to keep it for yourself. You have a big pie. Who cares about giving a big, what would be equally
sliver
to whoever
right.
as your income tax? You're a bigger player. You're a bigger fish in a smaller pond. Congratulations. Those are the rules of the games, guys. Beat inflation. Get over the hump of the income tax you're going to have to pay when the funds get out, when you're in your 70s or you retire at 65 or slightly earlier, and that's it. Does gold do it? I believe it will do it. Mm-hmm. We can run the numbers in the next segment, Jerry. Why don't we do that? Let's run some numbers of can you do it holding physical gold and silver? And again, not 100% gold and silver, but what could it do over the next decade or 2 decades?
We have to go through that.
Let's do it. The number 1-877-8-SILVER, the website guildhallwealth.com. It's the Real Money Show on AM 640. Stay tuned. Welcome back to the Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. We're talking about winning the RSP game. Making sure that you are holding assets that perform enough to beat inflation. What is inflation? It's simply the government printing money, creating money, zeros on a computer screen, ones and zeros on a computer screen. As Gerald Celente says, it's not worth the paper it's not printed on. We use the example of just how much it takes, how many hours at minimum wage it takes to buy an ounce of gold because our purchasing power has been diminished so much. It also reminds me of a story, Jerry. I had an acquaintance who managed a firm, one of these finance companies. You join, they give you a 6-7% return every year, that kind of thing, like pretty conservative. And after the financial crisis in 2008, this was years on. I said, how did you do? How'd your clients fare? Said, it took 5 years, but we got to break even. And I remember thinking, well, at 5% inflation every year, your clients are actually still down 25%. Nominally, they have the money in there, right? So we think about what Greenspan said. Hey, we'll always pay our debts. We just can't guarantee the purchasing power of the dollar when we do.
And you just lost 5 years.
And you just lost you've lost 5 years and you're still down 25%. So you're still running up that hill. This is the game. The game is, if you don't understand, and I don't know why advisors, correct me if I'm wrong, guys, email us, put the comments in YouTube. Advisors don't tell you this. They don't say, here's the rules. Beat inflation, beat the 30%. 40% income tax that you're going to pay at the end, and you're a winner. How hard is it? Let's run the numbers. Can gold double from $19.50 an ounce? Could it go up to $4,000 over the next decade?
Yes. When you have inflation, and this has, I'm going to bring up stagflation right off the bat. We have entered into an era of stagflation, one that mimics the 1970s and 80s. And again, what did gold do during this period? This was a decade long of low growth, high inflation, high interest rates, bad environment for anything paper related, bonds, stocks. What did gold do during this period? And we have entered into that. Inflation will continue, and the central banks have lost control. Gold went up over 800%. If you need on 100%, you need to double your money. Well, you're getting eightfold for gold.
In the 70s.
During the 70s and 80s. It peaked in the 1980s, and 2,000 ounces in 1980 of silver could buy yourself an average house in the U.S. And this is a cyclical market. These are cyclical ratios. The silver to real estate index, silver to gold ratio.
How many ounces to buy a house today? Any idea?
Today, without the calculator,
let's say 1.5 million. What's silver in Canadian dollars? Let's say 30, 25, 30, 50,000.
50,000 ounces. So that's today's silver to gold ratio at 80 to 1. What did silver do during this period? Silver went up 1,100%. So having silver, a portion, a sliver of your portfolio pie in the player of silver or gold, don't hate the player, hate the game. This is the game that we're playing. You want to, beat the game of the RSPs. Choose the right player to play this game. And that would be gold and silver in this time of stagflation, plus participation. When you have markets, coming in from the inverse pyramid of Exter's pyramid, when you have all of those derivatives and you have all of those investments, that's what Exter's pyramid pointed out. When the credit system expands, most money flows to the top of the pyramid. When you have all that stimulus, everything went up to the derivatives and these risky assets. The increasingly speculative and liquid investments those are. But when the credit system comes under pressure, as it is doing today, and debt cannot be repaid, the items at the top of that inverse pyramid get sold, and the money flows to the bottom items. And the bottom of Exter's pyramid is gold, and at the very tip is your silver bullion. And when you get into that market, when you have just 1.5% of all global assets jumping into gold, supply and demand, economics 101, we're going through the roof. And I do believe that silver and gold will outperform the performance of gold during stagflation 70s and 80s.
I still think that the people that are coming in today are still in the savvy category. They're the ones who, rightfully so, should have a little bit of panic in them of I need to protect myself. I need to undigitize my wealth. I need to unsubscribe from the fiat currency and get my protection and have that taken care of and be prepared.
Yes.
Down the road, there's going to be a whole bunch of people who just, meandered, Pollyanna-ish, closed their eyes, put the head in the sand, hoped for the best, and they're going to come panicking. And the big boys are going to come panicking too. Speaking of big boys, we didn't go into, by the way, if gold could go higher. Gold could go higher. It could go fantastically higher. Mm-hmm. Of course, it also means that the dollar's worthless. But if the dollar's worthless, then gold is priceless. So whether it goes to 4,000, 8,000 gold, 10,000, or infinite, it doesn't really matter because you're protecting against a currency that's obviously worthless. And all you have to do is go back to how many minimum wage hours does it take to buy an ounce of gold to really start to get that and understand it. But the big boys are getting in, and the central banks are getting in. Why such a almost panic on the part of central banks? You were just before the show, Jerry, you mentioned could it possibly be because gold is now a tier 1 asset?
Well, that's it. Just reminding the people that, back in March 29, 2019, gold bullion became a tier 1 capital asset. And this is coming in from the Basel Committee for Bank Supervision, the BCBS, making gold, turning it in from a tier 3 capital asset to tier 1 asset. So, gold is often criticized by Wall Street and Bay Street as being this kind of useless investment, but it's not useless when it comes down to what collateral can be at the bank. And that's the whole point here. When that happened in 2019, all the gold guys were like, wow, this is it. We're heading into something major. Because at that time, the repo markets were rearing its ugly head. We are seeing overnight liquidity markets happening. And, right now, what happens is that this committee in 2019 realized that something needs to be done. We need good collateral. Why? Because there's an imbalance of debt to collateral. This is what's happening. And it's impacting the ability of banks to make loans to their customers. And for central banks to make loans to commercial banks, and for shadow banks to be funded by the overnight repo market. Hence, the growth of gold as a collateral asset to debt-heavy markets is in the cards, and we're seeing a move for central bank buying like we've never seen before. The last year and a half, 2 years in central bank buying, there's a reason, because the upcoming massive debt rollover and collapse of faith in traditional collateral values, gold is that core banking asset. Gold is that new backstop for debt, for currencies, and bank equity capital. Remember, Canada has no gold, and that was a huge message this week, right after the Bank of Canada's announcement. And
we'll get right into that in the next segment. The number 18778-SILVER, the website, guildhallwealth.com. We'll be right back. Welcome back to The Real Money Show. You should know the number by now, 18778-SILVER. The website, you should know it by now, guildhallwealth.com. Get in touch. We're happy to talk to you about how you can get into some physical precious metals and show you how to get started. And we'll take you through the process step by step. Hold your hand, especially with registered accounts. It's something that we specialize in at Guildhall. And it's such a unique vehicle to be able to own physical precious metals in a registered account held in a vault facility outside the banking system. Truly prepared for anything. As you were talking about the central bank there, Jerry, I was thinking, will gold save the system, or will it save you if the system collapses? I think either way you win, but I'm curious if central banks are really acquiring it because the system is going to roll over. In other words, can it be saved, or are we waiting for a full collapse of it, and they're the ones at the table, which in some ways doesn't make them our friends. They're the ones at the table making the next rules.
Well, the reason, we're seeing they're buying gold to protect themselves. We haven't seen purchases in gold and silver by central banks like this since 1967. They are obviously there to, create reserves to protect themselves against what has been happening with their currencies. But when you bring the gold back into the market, you restore the currency. But it also restores almost credibility in these central banks, because they now have they have to temper their spending. They can no longer print at will. So it does fix the central bank's activities. But we do know the birth of central bankism really did come from nefarious sources, from communism and things like that, the manifesto. But with when you peg your system to gold, you keep a restraint on the elasticity of your currency. So it does. We'll see how this plays out, but we're seeing it play out very rapidly. There is an acceleration towards gold, towards central banks, towards backing up the currencies. And this is what gold and silver does, what gold has done for thousands of years. It's been that currency, and whenever there is a structural reform in the financial system, it restructures with the gold. And that is, we don't necessarily need to know exactly how things will play out and what will happen first, but gold will be involved, and gold will have a front seat, and it will be the solution.
Let's go to Gold Telegraph and see. It's been a while since we've gone to Gold Telegraph and see what they're talking about these days. It's a great place to get some info. They're on Telegram. They're also on Twitter. They're saying here's one from last week. Jamie Dimon of JP Morgan says the government shouldn't play games with the debt ceiling. And then they say, I wish JP Morgan never played games with the precious metals industry, which is funny because I was listening to something with Craig Hemke, and just the constant understanding of that he does, and to learn about the games that they've played on the COMEX. The result of it, though, is that really something majorly changed in March of 2020. And there was a blow up. And ever since then, it has been drained. And whatever smoke and mirrors they were using to keep the scheme alive has been in a failing mode ever since. And that can only be good things for us down the road. I don't think we need to depend necessarily on an exchange imploding for the price of gold to move much, much higher. Because look, gold's gone from 250 to 1950, and the COMEX has been around that entire time. So they're not doing the best of jobs. Countries are talking about combining currencies while they are stockpiling gold and working on central bank digital currencies. They ask the question, is the writing on the wall? Very quick, Jerry, we don't have too much time, but central bank digital currencies, yay or nay? Are you scared of them? Are they going to be able to implement them? I'm on the no side. I say, if the central banks fail and the currency fails, who's going to give credibility to these guys to give them the power to have a central bank currency?
Good point. If the central bank digital currency is just like a fiat, like their fiat currency 2.0, then I don't want it. However, if it is backed up with gold, then, it's something to be entertained. It's something that, will provide transparency, will build trust, confidence. And that's what's going on in the world. When you had Russia kicked off the SWIFT system, they pivoted. They pivoted towards gold, and trade went on, trade continued. And the move is on. The move is away from the SWIFT system. So ultimately, the SWIFT has to go. And, it's been a slow method of transferring money. We've known this. It needs to be upgraded. We need a more honest and transparent way of transacting. So we'll see how that goes.
Another one from Gold Telegraph. The Bank of Canada says the federal government is working on legislative changes that will allow the central bank to temporarily retain profits to cover losses. And by the way, they own zero gold. This comes from the Bank of Canada statement. Jerry, they've raised interest rates, obviously slowing, right? We still haven't seen the full effects of what's happened with the raising of the rates. But now they've come out and said, well, listen, we want to put in some legislations that will retain the profits on paper. So if there's losses, we're kind of covered. It makes zero sense. How do they do that?
Well, this is why we're speculating as to how they're going to retain profits and what legislative changes does the federal government have to implement? Not the Federal Reserve, not the Bank of Canada. What does the government of Canada have to do? What changes to retain profits amid losses? Now, we were seeing all central banks pretty much losing money, from the Bank of Sweden, Swiss National Bank, Federal Reserve, European Central Bank, Bank of Canada now. Huge failures across the world. How are they going to retain profit? What are they going to do? We do know that Bill C-15 was put into place, which is a law regarding bail-ins. Are they going to retain profits through deposits? We don't know. I'm not speculating that they will or will not, but the writing is there. You can go into it and review it for yourselves. And there's some other speculation. If you go down in the chat on the Gold Telegraph page, some suggest that it could potentially be a nationalization of gold mines. They did cite that they own zero gold. Bank of Canada is literally worthless, and they own no gold. So can they nationalize a mine? Legislative changes. We'll see what happens. But gold is important here.
That's what we talk about. We've talked about that on our show. Someone obviously was listening to the Real Money Show, and they've stolen our idea. Look, it's wizardry. It's alchemy. It's complete BS. You can avoid reality. You can't avoid the consequences of avoiding reality. Gold is reality. Silver is reality. Guys, thank you so much for listening. Thanks to all our customers from the weeks, and we just enjoy all of the conversations we have, as is the conversation you and I have had today, Jerry. The number 18778 Silver. The website, guildhallwealth.com. Till next week, it's The Real Money Show on AM 640.